I am no better than the next trader, just quicker at realizing my losses and moving on to the next trade. George Soros. Now, again, not one of my favorite people, but an unbelievably talented trader who has made billions of dollars based upon his ability to quickly realize losses and move on to the next trade, not to emotionalize it, consider himself a failure, quit, give up, get out of the market for a while, but to stick in through thick and thin, to stay in the market, figure out what's going on, act and react accordingly. That's why we say you need to be with us all the time. Yes, the summertime trading zone sucks. It's a terrible time. Many times. It's a hard time to trade and trade successfully, but it's the time you need to practice. In fact, maybe it's the time you need to practice most because it's the hardest time of year. Then when the fall-winter trading zone kicks in, it gets glorious. So again, stick with us. Stay with us. Fortune will only give her bounty to those who are willing to put in the effort. And that is on a daily basis, 10 to 15 minutes is all we ask. You can do this. If you don't have our book, please order it. We have the 11th edition. I was autographing copies and sending them out today. Also, those who are overseas that have been emailing us, I will be sending out your PayPal invoices. Pay those. We'll get your books out to you also. You can write us CW at chartingwealth.com anywhere in the world, whether you're in South Africa, the UK, Australia, New Zealand, you name it. We ship books to all those places and many more. If you're in the States, just follow the link in the show notes. Purchase the book. We'll get it right out to you. What do we see going on in the market today? We see stocks and bonds up. I'm feeling pretty good about that bond right now, although it's still, we like things to move. We'll talk about bonds when we get to them. What's going on with gold? Gold down a little bit, so we've got a little bit of a peel back underway, maybe a jumping in point for all of you who missed the jumping in point. I will show it to you again where it was. I got an email or somebody posting on YouTube. They didn't hear the entry point. Well, it's pretty easy to see. We've been talking about it for days. I'll show it yet again, and it's what you need to be watching for. We are not a stock calling service. We're an education firm. We are not giving market advice as to when you need to enter a trade. If you expect me to call it for you, you are dead wrong. I am not going to do that. I will show you what we're seeing in the charts, ask you to practice trade what it is we do, help you find your way and understand how to read these charts. Let's jump in. We see our weekly trend line continuing to move up, price well above the weekly on the S&P 500, up 0.36% for the day on the weekly chart. We see now finally looks like it's trying to pull away from the red signal line. It's been laminated for quite a while. That's the price percent oscillator. Derivative oscillator still negative. And again, don't have a jumping in point yet, but we do see, I'm going to move our crossover line a little bit. We still don't see that we have a wick that's reaching as high as the prior week did. The body of the candle is higher. We go from the weekly on the S&P 500 to the 2-day, first day of the latest 2-day candle. Charts are loading up quite slowly. I do not know why. That is frustrating. Let's see if we can move that along. There we go. What do we see on the 2-day charts? Well, we had a red spinning top for the 2-day candle representing Tuesday and Wednesday, and so far for Thursday, we have a down candle with a wick on the bottom that's forming. We don't call that candle yet, but we see the price percent oscillators flat, derivative oscillator losing upward momentum. Still in a confirmed up move, though, both the weekly and the 2-day. We go to that 4-hour chart. What do we see there? Well, trying to bottom, it looks like, up in the morning. A little bit of a little bit sketchier in the morning, a little bit more up movement in the afternoon, up 0.36%. However, Price percent oscillator still heading down on that 4-hour chart. Derivative oscillator still negative. We do see some major moves up in the morning or in the afternoon. Might find a jumping in spot soon, but the 4 hours still crossed over going down. You want to use that as your trigger. If it crosses over going up before the 2-day crosses over going down, then might have a jumping in point for further up movement in the S&P 500. Let's go to the Qs. What do we see with the NASDAQ 100? Again, we see a body that's bigger than the prior week, but top movement as far as the wick goes still hasn't reached where it did in the prior week. We're still negative on the price percent oscillator and the derivative oscillator. Haven't had a crossover yet, so still down on our weekly chart. What does our 2-day chart show us? And again, loading up quite slowly, rather frustrating. See if that 2-day chart will pop up for us. Don't know why the charts are loading so slowly for the 2-day. It's not the chart's fault. It is the Wi-Fi. That's what I always find. But there we go. 2-day chart shows us that, of course, it crossed through the 2-day trend line after yesterday's movement, and the first day of this latest 2-day candle, again, is out of the 2-day trend line. Hasn't crossed over going down, so it's still up. So we have that divergence between the weekly down, 2-day up. We don't have a movement in the Qs at this time, but we do see the derivative oscillator losing upward momentum. Price percent oscillator still up. We go to the 4-hour chart. Maybe things are bottoming out, flattening. We basically have two spinning tops, green spinning tops, indecision tending up. Price percent oscillator still down. Derivative oscillator still down. So waiting to see how the Qs sort themselves out. We'll continue to watch and see. Qs up for the day 0.36%. Go to 20-year bonds. What do we see there? Up for the day 0.70%. Again, with that, the wick on top still not pushing higher than it did the prior week. Derivative oscillators losing a little momentum. Price percent oscillator still heading up at about the same angle, maybe a little better. 2-day chart getting closer to that red signal line day after day after day. Derivative oscillator also losing momentum. Price is above the blue 2-day trend line, well above, still decently above the weekly. So again, weaker and weaker and weaker makes me concerned. What does a 4-hour chart show us? It is trying with that afternoon up movement, about flat in the morning and then moving up in the afternoon. Derivative oscillator losing downward momentum. Maybe we're getting ready to cross over going up on that 4-hour chart. We'll continue to watch, see what there is to see. If you're in that trade like I am, of course, would like it to take off and start moving up. It's being very slumpy on us. But again, weekly still looks up decently. 2-day continuing to get weaker. Keep an eye on things in the morning. If again, day starts off super weak, you might be pulling that trade. So just be careful. Watch that 2-day in particular. Maybe things will bounce and really start to move. Okay, let's go to gold. Down for the day, 0.10% now. Big, strong up week still with gold. Derivative oscillator heading up. Price percent oscillator heading up. Big green up candle. Go to the 2-day chart. What do we see there? Well, we see a cooling off first day of this latest 2-day candle after 3 nice, decent up candles. Derivative oscillator still heading up. Derivative oscillator losing momentum. Price percent oscillator still heading up. We go to the 4-hour chart. Look at what's happened. A pullback. Now, is gold going to keep going down for a while? Is it going to be strong enough to pull over the 2-day chart going down? Maybe, maybe not, because it's been so strong going up. But we do have a pullback. We have a rollback. So what are we waiting for? Well, the potential of gold turning around and crossing over, going back up on that 4-hour chart. If that happens, that's going to be your trigger to jump back into another up move on gold. So we'll keep our eye on things and see what there is to see. If gold does turn back around, heading up while the 2-day and the weekly are still in confirmed up moves, that's your signal for jumping in. Now, for those of you still questioning when the initial jumping in point was that we mentioned, the day that it happened, that was on last Thursday. We had strong up movement in the morning with the crossover on the 4-hour chart. The jumping in point was Thursday afternoon, as it always is when we have that morning crossover occur, somewhere around the 129 point. And again, quite beautiful. If you were in that move, where would you be now? Well, if you had decided to take the money and run when things really topped on Tuesday morning around 135.55, that was fine. If you hung in there and are still in that initial move, of course, what's going on? Well, your weekly chart is still nice and strong. Your 2-day chart is still decently strong. The pullback's a bit of a concern. You'd be watching to see how this candle ends up forming and then continuing to make your decision as to whether or not you might sell off part of your position or hang in there until you start having violations of trend lines and other things. I think what we might do at this point, though, to give us a better 2-day trend line is go ahead and see if we can connect. I'd really like to be able to connect 3 candles, but can't quite do that. That will give you a little bit more of a perspective on a tougher trend line there on the 2-day, and then see how that ends up finishing off when that 2-day candle finishes drawing on Friday. Folks, that's where we are as we end the day on Thursday. Going to the last day of the week, very interesting possibilities. Continue to watch the S&P 500. If you're in that TLT bond trade, keep your eye on bonds. And of course, watch for gold to cross back over, going up on that 4-hour chart for a trigger to jump into a practice gold trade. That's where we are as we end the day. If you haven't purchased the book, do so. You want to be a Patreon supporter and get all the special benefits, which includes our How to Trade Bitcoin. It is a training that we have. Again, educational training on that. That's available for our members, our Patreon supporters, along with the short chart training, along with the quarterly chart training. And don't forget, at the end of this month, it's the end of the second quarter. We're going to have a special training on that for our members. So again, if you haven't signed up and aren't a subscriber to our podcast and our email, please go ahead and do that. All you got to do is go to chartingwealth.com, sign up. We will get it to you. And since it is already Thursday, yesterday at the close of the market on Wednesday, did you just clear your mind and look at the weekly charts like we ask you to do once a week on Wednesdays about midweek? Just look at the weekly charts. Don't focus on anything but them, and see what you think the trends are, where gold is going, where bonds are going, where our 2 stock indexes, the NASDAQ 100 and the S&P 500. Did you do that yesterday? Are you doing that once a week? Just stopping and getting a broad view. I'm going to put that training back at the end of the video today. I want you to have that. I'll also put it in the show notes for those that are listening on the podcast audio-wise. I'll put that training in there for you. I want you to have that. I want you to get a big picture. Once a week, step back, really analyze what's actually happening. Folks, that's all we have for today. God bless. All the best from the whole team here at Charting Wealth World Headquarters.